Namaste, and welcome to the Capital Current. I'm Chidananda. Today, we're talking about a number so huge, it's hard to even imagine. $338 trillion. Yes, according to the International Institute of Finance, the total global debt has now hit a record high, an all-time peak never seen before in human history. From China and the United States to France, Germany, the UK, and Japan, the world's biggest economies are borrowing more than ever. Even emerging markets have added another $3.4 trillion in new debt. The question is, are we sitting on a ticking financial time bomb? And if this bubble bursts, what happens to the world economy and to us? Drop. The global debt explosion. Let's start with the big picture. Global debt has skyrocketed to $338 trillion, and in just the last 6 months alone, over $21 trillion was added. If this pace continues, by the end of 2025, the total could exceed $360 trillion. To put that into perspective, global GDP is around $110 trillion, meaning the debt to GDP ratio of the world is now 324%. In simple terms, the world owes 3 times more money than it produces in an entire year. Segment 2. Major economies drowning in debt. Take China, for example. Its debt to GDP ratio has soared to a staggering 335%, translating to nearly $70 trillion in total debt, even though its economy is worth about $20 trillion. That's a $50 trillion black hole nobody wants to talk about. Japan's debt is over 250% of its GDP. France owes more than $4 trillion, around 120 to 125% of its GDP. And the United States? America's national debt now exceeds $37 trillion and is expected to reach $54 trillion by 2034. Interest payments alone are crossing $1 trillion a year. These numbers aren't just statistics. They're warning signs of a global system under pressure. Segment 3. The debt bubble and the risk of collapse. So what happens when the world keeps printing money and piling on debt? First, asset prices inflate, creating bubbles in housing, stocks, and commodities. Then, those bubbles burst, triggering crashes. Governments respond with bailouts and more money printing, which fuels the cycle again. We saw it in the 1997 Asian financial crisis, and again during the 2008 subprime meltdown. But this time, the problem is far bigger, and the next crisis might not be something the system can absorb. Experts warn that if even one major economy defaults on its debt, it could trigger a chain reaction, collapsing banks, destroying wealth, and plunging the world into a severe recession. Segment 4. Social and economic consequences. And this isn't just about governments and corporations. Debt has a direct impact on ordinary people. Inflation rises, making everyday goods more expensive. Interest rates climb, increasing the cost of loans and mortgages. Jobs disappear as companies struggle with rising costs. And if stagflation hits, a deadly mix of slow growth and high inflation, economies could stagnate for years, with devastating effects on employment and income. Segment 5. The India perspective. So, what about India? India's situation is relatively stable. Our total debt is about 81% of GDP, much lower than major economies. The government is actively reducing fiscal deficits, investing heavily in infrastructure, and focusing on long-term growth. India's young population, 67% under 35, is a massive demographic advantage. Our economy is expected to become a $10 trillion powerhouse within the next decade. And with strong foreign reserves, gold holdings, and rising technological capacity, India is in a better position to weather a global storm. But there's a caution. Household debt is rising. Too many people are spending on luxury goods and electronics they don't need, often on credit. This could become a risk if the global economy turns volatile. Conclusion: a warning and a way forward. The global debt crisis isn't a distant problem. It's here, it's growing, and it affects all of us, from the cost of groceries to the security of our jobs. The world economy is on a dangerous path, and unless governments, central banks, and financial institutions take real structural reforms, not just bailouts and money printing, the great financial reset might not be a theory. It could become our reality by 2030. India must stay cautious, focused, and disciplined. And as citizens, we too must rethink our habits, save more, invest wisely, and avoid unnecessary debt. Because in a world drowning in trillions of dollars of borrowing, financial survival will depend on how prepared we are when the bubble bursts. This is Chidananda, and you've been watching The Capital Current. If you found this analysis insightful, don't forget to like, share, and subscribe. And let us know your thoughts in the comments. Until next time, stay informed, stay aware, and as always, Jai Hind.